This is the Global Economic Scrap Metal Commodities and Recycling Report by BENLEE Roll-Off Trailers and Lugger Trucks, October 1st, 2018. Last week, commodity prices and economic reports are mostly mixed. U.S. steel production rose, nearing their multi-year high of a few weeks ago as tariffs continue to support U.S. steel production. Oil rose about $4.50 to $73.63 on a good economy, limited production by OPEC, and importantly, reduced sales by Iran as sanctions kick in, restraining global supplies. Oil prices are near multi-year highs. U.S. oil production rose to a new all-time high of 11.1 million barrels per day. Absolutely great economic news. Iron ore rose $1 to $69.50 a ton on limited economic news, other than, of course, China tariff issues causing global uneasiness. Scrap steel #1 heavy melt remained at $300 a gross ton on a good balance of supply and demand as we look at little change in prices for October. The effect of the Hurricane Florence is actually bringing limited materials into scrapyards, so we see no big factor yet. Hot dip galvanized steel remains steady at $11.45 a ton, near the multi-year high on a good balance of supply and demand. Copper fell 4 cents to $2.80, with U.S. tariffs causing a slowdown in China, which consumes about 50% of the world's copper, and that's hurting global demand. Copper is no change early this morning. The 5-year copper chart shows prices remain near the recent 1-year low that it hit about 1 month ago. Copper inventories fell near a 1-year low as markets remained under downward pressure due to the China slowdown. Aluminum rose about a penny to 91.95 cents, remaining near the 5-month lows as tariffs continue their global effects on the economy. Aluminum LME inventories fell to a 9-year low on good demand and limited supplies. Early this morning it was announced that the U.S. cut a new trade deal with Canada to replace NAFTA, the North American Free Trade Agreement. A deal with Mexico was cut a few weeks ago. Together, very positive news for the U.S. China's September's General Manufacturing Purchasing Managers Index fell to a 16-month low of 50, with output and growth easing, new orders stalled, and new export business fell to the lowest since early 2016. This puts downward pressure on commodity prices due to China is a huge consumer of oil, copper, iron ore, and more. August's U.S. new home sales rose 3.5% to a 3-month high of 629,000. This is great upside in that this is still less than half the all-time high of 1.4 million of July 2005. Higher housing puts pressure on commodity prices, though. The U.S. Fed increased interest rates to slow the economy and keep inflation in check. They're worried that the tight labor force could cause serious wage inflation that could be too high for the economy. The second quarter U.S. growth was confirmed at 4.2%, a terrific number and the best since 2014, with tax cuts and government spending supporting the very solid growth. Great news. High growth is important to the economy, yet the government is still forecasting interest on the federal debt will more than triple in the next 10 years, reaching $915 billion in 10 years, which is larger than today's defense budget of $717 billion. This could raise key interest rates in the future and hurt government spending. August's U.S. durable goods surged by 4.5%, driven by transportation equipment, including aircraft. A great number. If military orders are excluded, it still rose a great 2.6%. Wall Street's Dow Jones Industrial Average had another great week, ending up 303 points to 26,458, as the U.S. stands out as one of the global economy's highest growth areas. The S&P 500, which is a broader index, just finished its best quarter since 2013. Things are very good in the U.S. economy. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.